All right. Hello, everybody. Welcome back to another episode of Tech Bros. I'm not going to lie. I was part of the reason why we were late today, but I'm just trying to take
some truth, some honesty.
Taking some accountability. It was partly my fault. But we're here. It's a big week for earnings. We got Hoodie on Wednesday. We'll all be live. We got SOFI tomorrow. That's very important. We have UNH, Spotify, PayPal, a lot of these companies. And then Wednesday, we have Microsoft and Meta. So we're going to try to talk about a bunch of these different company earnings. Essentially, today's episode is going to be a little bit of an earnings preview across the board. We already did a very in-depth Robinhood preview last week. So this is not the week where we're going to go into the nitty-gritty numbers. We'll probably give a high-level overview. But last week's episode, you can check out for very specific Robinhood coverage. This week, we'll kind of do a general thoughts and kind of predictions on some of the companies that we have going on this week. Roy, Tanner, excited for this week?
It's a big one. Yeah. I love it when so many of my holdings report. I just wish they didn't do it simultaneously. That's just annoying. But other than that, I'm happy.
Yeah, exact same thoughts. I mean, I love whenever it gets this busy. This is so much fun. Like, especially whenever massive, like Microsoft and Meta doing it on the exact same day, like the fluctuations in just the general S&P 500 could be huge. Like, I love the impact that these weeks can have on the markets. That being said, I just wish that they were spread out so I could have an hour to digest Meta, an hour to digest Microsoft, and actually be able to talk about them on stream rather than them all coming out and having pieces of information of all of them.
Yeah, and all three of those are happening the same day with Hood.
Yeah.
It's gonna
and Qualcomm and a bunch of other like it just spreads out the fun, I think, a little bit. But
yeah, it's gonna be pretty wild, pretty freaking wild. All right, so let's do a quick preview on Hoodie, and then we will talk about some of the other names that we got going on. In general, I think all of us are pretty bullish. Vlad did do a introduction to his new startup today, his new mathematical LLM. And so that was nice to kind of see him dress up. This is the type of CEO you want to invest in. This is the type of CEO you want to invest in. Roy
he likes the costumes.
He likes the costumes. Your thoughts on Wednesday earnings?
I thought you were going to say Harmonic. Harmonic, a lot of it was just frankly way over my head. But I mean, like, honestly, he's a polymath, pun slightly intended there. And it's, of course, that's the earnings that we're all going to be paying attention to here. The good thing is we know most of the numbers going in, although this is the least certain about Robinhood that we've been, just because there's been a lot of changes and things that they've done as far as acquisitions. So we don't know how that'll line up. But I mean, we know that they're going to report very good earnings that I don't like. It doesn't feel like Robinhood is egregiously overvalued or egregiously expensive here. But in a dream scenario, really good numbers, no causes for concern, and a nice brutal pullback so I can add more. That's what I'd love to see. But yeah, the earnings are going to be great. It's an amazing company. They, I mean, everybody knows it. And actually, that's one of the cool things is if you like monitor earnings and earnings statements by other companies, a lot of times, like actually Schwab mentioned, and also IBKR mentioned Robinhood specifically during their earnings call. Now, one of them was an analyst prompted question, but when your competition is speaking your name, you know you're doing something right.
yeah, it was very interesting watching the Harmonic thing. I don't understand the total addressable market for that business, like how big it could possibly get, but that's also not what we're buying into whenever we're buying Hood, right? This is like almost like a side project for these nerds, but I'm happy that they're doing it. I mean, it's very exciting. I don't know what everyone's making fun of his outfit for. He just looked like me, but you know, that's just what I wear on Wednesdays. But overall, yeah, it was kind of cool. I'm more excited about Robinhood and, you know, hopefully spending most of his time there.
So what do you think happens on Wednesday with Hood?
On Wednesday, I mean, dude, my predictions are higher than both of your guys. I actually should check. What was the upper bound range for revenue for? I wonder if I'm higher than the highest analyst. Let's see. Because if I am, I mean, I'll be excited. I'll be excited if what I say comes true. But yeah.
Okay,
the highest range for revenue is 952. So there's analysts out there that are much more bullish than me for Wednesday.
952 someone has?
Yeah.
Bro, what if Vlad comes in with like $1 billion?
Yeah, the range on EPS is 25 to 38 cents. And then EPS is revenue is 830 million to 952 million. This is a company, by the way, where we know all of the trading days. There's like 4 days that we didn't end up seeing. We don't know the take rates, and then we don't know the external businesses. And the difference in the revenue is $152 million. You could fit Harmonic in there.
Yeah, I think part of that though is I wouldn't necessarily call them lazy, but analysts will put out their numbers. At one point, and maybe you'll have like a month and a half left, and then Robinhood will come out with those preliminary monthly metrics, and it's just like, good enough. So I know that there's always some of that too, but it is pretty wild, the range. But part of that is acquisitions as well. We also don't know margin book. I saw someone today note, I think it was Jacob, that it looked like the take rate for crypto is climbing a bit. So, which isn't shocking, but maybe a little bit faster than we expect. So there could be some beats here. But the nice thing is, I'm just so calm when it comes to Robinhood earnings, because if it goes down a lot, we know it's probably for no reason because we see the numbers. That's a great opportunity. I wouldn't mind having more. Or B, it's just really good numbers. So yeah, right there. That's Coinbase like.
Well, it's not Coinbase like. Come on now.
Oh, okay. Well, yeah.
Coinbase is at like 1.5.
Yeah. Well, there's a maker in the taker market too, but I wanted, yeah.
If we come in at 950, we're going to 120, bro. We're going to 120. Like, this thing is going to 120. The only fear I have though is August we dump every year. So it's like, even if we get there, can we maintain it and hold it? But like, I don't know, dude. If they actually beat estimates to 950, 960, which I don't see that happening, honestly. But if it does, I think the street's like, holy crap. This is going to be exciting. You know what I was thinking about, actually? So I'm bullish on Robinhood. I think they'll be fine. If they dump, I'll buy more. If they go up, then I'll be happy. But they did 1.01 billion of revenue in Q4 of 2024. They're going to have to beat that next year.
They don't have to.
No. Yeah, they have to show some growth year over year, right? You think it's going to be okay for a growth stock growing 0% year over year?
Yeah, for a brokerage in a very cyclical area, I think that as long as the underlying,
if they don't show growth, I think the stock gets hit. And I was just thinking about it the other day. I was like, wait a second, they've got to beat $1 billion in Q4.
Yeah, I agree with Tanner. Like, this isn't Palantir or SoFi where you're like dependably growing, and if it doesn't, there's got to be something weird, maybe just a one-off, one-quarter thing. That does happen. I think that the street would actually be more concerned if there were 2 consecutive quarters of sequential decline for Robinhood. Not just not beating year over year, but a sequential decline. That's when I think that we'd see the stock actually cook off. It'd probably be in a crypto winter or something like that. That'll happen at some point in the future. Hopefully not for a long time, but I think we're solid. But yeah, year over year, like, we might see a very temporary drawdown. But like, the thing is about this company is most people understand it's cyclical. It's not that big of a deal to have year over year down, because they're going to have year over year where it's up like 50 to 100% other quarters. But if we get a sell off, like, unless the entire macro is melting down and selling off, there's a lot of people that want to buy this stock, ourselves included. So I think that's a dip that gets bought up if it's something silly like that. And I hope it happens. Let this be the quarter. I know you're talking about quarter 4, but yeah.
The reason I brought it up is because I'm like, what if Vlad and the team internally are pushing to make sure Q4 shows year-over-year growth? Because they just want to continue, the momentum of being a growth stock, which means they have to push more products. They have to double down on marketing for gold subscriber, whatever it may be for them to get over the edge. Obviously, if the market tanks, they can't control it. But maybe there is a world where they're like, hey, we've got to start putting up $1 billion every quarter sustainably, even though we're a cyclical business. Not easy to do, but if they can, I think we get to hold our multiple.
Yeah. Can you share this real quick? Robinhood, this is what I'm expecting. This is not what Roy, like, we're not a collective group. Okay. This is not our opinion. This is just my opinion. I think we're going to get 941 million in revenue. Okay. Of that 941 million in revenue, there's 167 million of that comes from cryptocurrency. If I just adjusted and then undid it. So I'm just going to redo. If I put that spread to 85.85, which is not what the average is going to be. I would put it at a 0% chance of this being the outcome. But if the new standard is 85 in that area, they're trying to test 90, they're trying to test 1%, maybe they're trying to test 0.6, something like this. That adds, if I just adjust it here, that would add from 167 to 247. So adding $80 million just in changing the take. So that is a thing that could end up happening, where we are underestimating this quarter is how much they've adjusted their take rate, right? I think it was 5.7 last quarter or 5.5, something like that. If that gets up to 6, that's going to blow away a lot of our expectations. If it gets to 6.5, that's insane. And if the long-term outcome is they want to get to 0.85% on all crypto transactions, as long as the growth rate stays there, the only thing that I think would impact that is if there's new companies trying to undercut them on price. But I don't know any that are that low unless you're putting in millions of dollars. I don't know what the how much the order was from Joshua to get that spread. But
yeah, I'm not sure.
Yeah, like
what other exchanges are out there besides Robinhood and Coinbase that mass market adoption? It's like I can't think of any. Yeah, but those are already established. Like what, like, and are they really expanding their presence? It's not weak.
Yeah, you got like Kraken, Gemini, Binance. Like there's a bunch of you got like the OKKs or whatever. Like there's a lot of crypto ones, but not so much in North America. That's the only problem.
Exactly. Yeah.
But it would be more adoption internationally that might impact it. That's the thing too. Like they're going to expand into like 30 plus more countries. Like, I don't know. I can't wait to see all the growth levels that we didn't even talk about. Like in terms of what's the new amount of international customers? I think last quarter they highlighted that they got to like 100,000 customers, international customers. It would be interesting to see how that grows over time. What WonderFi does to impact their total crypto volume. Remember, that's not a brokerage in Canada. That's a pure crypto play here in Canada. So if crypto continues on its journey right now and into higher highs, that'll be a very well-priced acquisition.
Yeah.
Yeah, I think Q2 or H2, we have a lot of catalysts. I think this is what also will keep the momentum in the stock because there's a lot of things to be excited about. Even if August and September is weak, which if you look at Hood's earnings seasonally, it's pretty freaking weak. Like August and September are not good for Robinhood, but maybe I think July was incredible. I mean, July's been so volatile. I can't wait to see the July monthly metrics. But all of this that you're looking on the screen, plus Singapore, plus a bunch of other things I left out, they're S&P inclusion. I mean, there's just so much to get excited for. And I think if Vlad can deliver, I don't know, I think we at least see 115. But he's got to deliver. He's got to deliver. Because we're still up 3x in 3 months. So I'm not trying to be greedy, but like, it's possible.
I mean, they deliver more reliably than Amazon does their packages. So
that's a good point.
It's at some point they will stumble. They have in the past. They will in the future. Like it's no company is perfect, but I mean they execute so well. They have. This isn't just them like looking 2 years out at a roadmap. Like they have a roadmap charted out like decades of things that they'd like to launch, and of course a lot of that is malleable. But man, they know where they're going. They know what they're doing. They have a very clear strategy. They know when to build it in house. They know where they're like, hey, we would really accelerate here if we acquire a company. They know how to handle acquisitions very well. Regulations as well. It's an amazing time to be an investor. And of course, the market for us, like it's great because it's appreciated our share price by a lot. But it's one of the reasons why Robinhood's trading where it's at. And I don't know, like they would really have to stumble. And I don't see Robinhood like doing that terribly for the market, I think, to lose sight of the fact that Robinhood is a leader here.
I liked your delivering packages analogy. I like it.
So we have Steve coming on in 12 minutes to talk Google. So let's just preview SoFi and PayPal. Start with SoFi.
Thank you.
I know you just spent an hour talking about
PayPal.
Yeah. Do you think they crush? What do you think?
Yeah.
Do I think that they crush guidance and estimates? Yes. What happens to the stock? I don't know. Historically, they've gone down on even triple beats, and then the narrative always points to their worst part. Financial services, everything, loan platform taking off, brand new beats. Tech platform loses large customer. That's the narrative that gets posted. It's a sad reality for SoFi. This time, I don't know what's going to happen with the tech platform. It's always a little bit of a black box. Financial services, going to crush it. Lending, going to crush it. We're seeing it from every single competitor that's out there, is that this quarter was pretty freaking good for the macro for them. And that asset managers, pension funds, hedge funds are all looking for demand for their loans. So I'm interested. I think that they could actually break a pretty interesting milestone, Amit. I know that you fancy companies where their goals are 40+% growth rates. SoFi, I think, is going to surpass 40+% growth rates this year.
Quarter or this year?
This quarter, year over year.
Yeah, I actually have them coming at 45%. They might be a little bit less than that. That's very bullish, but it is against a weaker comp, but that doesn't take away from this being a ridiculously strong quarter. And my thoughts are, like, if they actually hit the number that I'm projecting, the stock should probably do pretty well, because that is a huge leap above what anyone is expecting.
What is the street expecting? Is the street expecting 30?
34, 5?
7 or something?
Yeah, it's mid-30s.
Wait, the street they're expecting 37. So Tanner's at 40 and you're at 45.
Yeah.
Huh.
Tanner, you were at 39.9. What are you talking about?
You're right. I was at 39.92% to be exact.
That's right, you bear.
Yeah. Yeah.
Well, so one of the things we talked about when we were talking on SoFi Weekly, or whatever we call it now, FinTech Fridays, is that 40% number is a magic number. There are companies out there that grow 30% year over year, and it's like, yeah, that's good. They're a good company, usually smaller. But when a company of this size hits that 40% year over year mark, I mean, Palantir did it as well. Palantir is a whole nother level. It's a unicorn. But anytime a big company like this accelerates to that point, the market doesn't care if it's like, oh, it's just a one-off, or it's against a weak comp. It doesn't care. It's like, dude, 40 freaking percent. And so there's going to be a lot of people, if they do that, and I feel very confident in 40% plus. 45% might be a little ambitious. There will be a lot of new eyeballs on it that haven't looked at SoFi since the SPAC days. And they'll say, okay, why are they growing so fast? What are they doing? What are they building? And that tends to build the narrative, but that also tends to build a lot of new investors that help the stock price rise. So anything can happen. I'm not playing earnings. I just have a large position, but they're going to kill it this quarter. That's one of the reasons why I'm covering PayPal live instead of SoFi, because I already know SoFi is going to be amazing. PayPal, I have some question marks on.
This essentially shows you the, gradual decrease as the macro has been tough and the comps have been tough. You can see here, June is the weaker comp. This is why people are excited, but they're also realizing that, the quarter after is going to be really hard again. But there is real growth this quarter. So the expectation is not that we're going to fall back down to 20% after this. Lending is going to reach a new, high amount of growth, high amount of margins. Same for financial services, tech platform, black box. But that this is what the street is expecting. This is guidance. Okay, so you can see estimated 37%, an acceleration, not to the levels that we've seen of since back in March. And if we do come in at a 40 or potentially 45% growth rate, this will be levels that we haven't seen since, back in maybe December of 2022, March of 2023 type area. So it is exciting, but the margins that we're going to get on this growth versus what we saw back then is going to be at all-time highs. So my question to you, Amit, do you still have any stake right now?
Yeah, I have my options, but that's it. It's a pretty asymmetric bet. I bought $3,500 worth of options. If SoFi gets to 20, it becomes 50,000. So to me, it was like I didn't have enough faith to buy the stock, obviously, over other convictions I had, but I did think at $7 it was cheap. And so I guess hopefully Noto keeps it to 20 by January 2026. After I have to ask myself, do I want to actually establish a position? And I don't know. I think this quarter is going to be very important for me because I have no problem buying shares at like 20, $25 if they execute, even after I cashed out the options. And like just holding SoFi. I mean, growing 40% is growing 40%. They can keep doing that. Like, I'm interested. But I'm also curious how the market perceives this 40% number. I mean, 40% should not be disrespected. It's not like SoFi is egregiously overvalued or something where 40% is the bare minimum. If they get that, I think 25, 27, 28 should be on the table. And if that doesn't happen, I wonder if the market's like, well, that 40% is lending. It's not really tech. If it's that same debate that we had a couple months ago, does that pop up?
More than half is non-lending. That was a clue that Noto gave us too a few weeks ago. So
yeah, first time in company history.
Yep. Increasingly so.
Yeah, which Devin Ryan in his report said every quarter that it leans more towards fee-based revenue should be an add to their multiple. And every quarter it's just been slowly ticking up. So he thinks that not only is the company growing, but it actually the multiple should be higher on the company every quarter.
Yeah.
I don't think he's crazy for thinking that. Not at all.
Right? That's what fintechs do. That's what puts Robinhood in their place right now, or why they're valued so high, is that it's just toll income.
Well, the reason I do think Robinhood's value highly because of their operating margins, and that for SoFi still is not the best, right?
But a lot of that is because just the toll base, like the fee based revenue. There's no losses. They can't lose on the product that they're offering, other than credit cards.
So, do you expect the operating margins to inflect in the next like 2 quarters, 3 quarters?
Well, what does inflect mean? I mean,
like 6 cents a share to turn into like 20 cents a share.
Yes. Yeah,
that much. There will be an.
That's what they're guiding for. They're saying 2026 at 55 to 80 cents. So if we're on the upper bound 80 cents, that's 20 cents. That's 20 cents a quarter.
Yeah.
Next year.
Yeah.
And it won't be 20 cents a quarter. It'll be 15, 18, 25, 28, something like that. But yeah.
Okay, so put in the chat, pump or dump on SoFi. What do you guys think? And while the chat's answering that, Roy, PayPal, they announced some crypto thing today, PayPal World. What's going on tomorrow with PayPal?
2 things to note with this earnings. One is, I guess actually both are kind of unusual, but one is incredibly unusual. Most companies observe, not by law, but by choice, a quiet period before earnings. And PayPal has been freaking noisy. Launching, PayPal World is not a small deal, by the way. Pay by Crypto, not as big. The Wix partnership, been doing interviews. There's a lot. And then you look at the cadence over this last quarter, it's really increased a lot as well. Even an interview was announced a couple of days after the earnings too. I think a day and a half after, on AI, and PayPal is all over that. Now, they're not an pure AI play or anything like that, but that's unusual. So I'm not sure if it's just like a different shift in strategy or what's going on there, but I guess they realized like, hey, whatever they were doing before to craft the narrative wasn't working, so they're changing it. I like that. Quarter 2 is the last challenging quarter, and I'll say challenging. I don't think it's too challenging because if you look at expectations, they're ridiculously low. It's a little bit challenging because of intentional headwinds that PayPal has. Takes about 5% away from the top line growth. That's why they grew so little most of the reason why they grew so little last quarter. And that largely goes away after this quarter. It's a shift that actually is improving bottom line margins. Now they're going to absolutely crush the revenue. EPS will probably be a small beat. That one might even be a small miss just because they've shifted so much marketing expense. But what is critical here is the guidance. And the guidance really excites me because prior quarter, just like a lot of other companies, they said, okay, we are not going to raise our guidance. They didn't retract it, but they didn't raise it, even though comment after comment indicated we'd love to raise our guidance. We'd love to, but tariffs, so we just got to be careful. And then they baked into their guidance from the beginning of the year a 3% slowdown in e-commerce, not for PayPal, but globally. They're like, well, just in case things are bad, 3% e-commerce, didn't raise it because of tariffs, and they didn't bake in any new venture, any new product, nothing like that at all. And they also were banking on a very high US dollar compared to the other currencies, the DXY. And it's been completely the opposite. The US dollar is trading against a basket of currencies actually positively for once. So US dollar is actually down. It's like 97, 98 right now, which is incredibly bullish for companies that report international revenue, not just PayPal. Now, they do hedge against that, so they're not going to realize the entire set of gains that they would otherwise, but they will reduce that hedge, especially as that continues to persist. Very bullish for them and other companies like what we're going to talk about in a moment, Google. Of course, e-commerce has not decelerated. Prime Day, there was mixed headlines, but Adobe Analytics indicated that the first day of Prime Day, that worldwide e-commerce, not just Amazon, was up 9.9%. That doesn't sound like a 3% worldwide decrease to me. There's been a lot of other ventures that they've launched, including very simple to monetize ones, like the omnichannel in Germany. We saw, of course, the Big 10, Big 12 partnership, things that they launched the last couple of weeks. There's been so much that they built out, and also advertising, which will begin ramping up in the second half, that they've not guided a single penny for. So why am I saying that? I think it depends how aggressive they choose to be with guidance. I think they'll still be conservative because they tend to be, but they're going to shock people the way that they raise their guidance. And I think that that's what the market is paying the most attention to. So we'll see what happens with share price. I've seen it all with PayPal, so who knows? I'm actually kind of expecting it to be range bound, perhaps all the way until Q4 reports in January, because next year's guidance is going to be something else too. But man, they have a whole lot going for them. They're clearly innovating. They're clearly accelerating. They're clearly not sitting still. They're positioned very well across a lot of ventures. Now, there are some things that are not going well and not going perfect and things that need to improve. But yeah, this is an exciting play. This actually, last little thought is PayPal was a complete mess when Alex Chriss took over, and the turnaround took a lot longer. It has been a painful, painful hold this time and a real opportunity cost. I think that's the biggest risk going forward. But just like it was with PayPal, if you remember a couple of years ago, Amit, you and I were talking on X, and I called out Walmart. I'm like, hey, Walmart on the back end has been doing some freaking exciting things in the market. You know, they're already massive, but the market is undervaluing Walmart. I didn't invest in it. I was too focused on other things, and that was fine. They went on a mammoth run because of that back end stuff that they did with their website, with e-commerce, with advertising, with their own tech stack, with in-house warehouse stuff, with mechanization and AI and all sorts of different things. And that same guy that was in charge of that is now PayPal's CTO. He is the one that's been shifting over their tech stack. And they mentioned this, went into great detail in their investor day last year. So I guess at the beginning of this year. So they're doing the same thing. I think it's the same kind of opportunity. This isn't a meta where it's going to like go up to 700 from wherever it's at like real quickly. But I think that this is what you'll see, just like Walmart, just the sheer size, power, and dominance that PayPal is wielding for the first time with an actual effective tech stack, actual effective leadership, actual effective vision. Not everything is perfect, but they're a juggernaut, and they're going to start ramping things up. We're going to really see that in the second half of the year. So very excited. Again, the last challenging quarter, and it may be just because of top line revenue, like, sell off PayPal. Who cares? If so, Q3.
Okay. I think the pay with crypto is a really big deal, honestly. I think you actually downplayed it. I think that it shows that they will be there even for the future parts of commerce.
Yeah, I meant that more so as like an immediate revenue hit. So sure. Like the PayPal world, some this year, next year with Venmo, with what they're doing, anywhere PayPal is accepted, Venmo is as well as all these other huge, like 2 billion different people are connected through that system. That's a massive revenue driver.
I think that PayPal could get sold off if there's a lot of movement from Coinbase and these sort of ones that are starting to suggest that people are using their crypto wallets to start paying more. So the fact that they have this kind of stops that bear case from even starting to get created because, hey, you'll be able to do all of that exactly where you were doing commerce before. So I love to see that today. That was awesome.
That's actually a good call out because PayPal, like for years, was, you know, they were leaders and they went to laggards and kind of lazy, frankly, and they would respond to things incredibly slowly. And now, I mean, they've had their own stablecoin longer than any other non-pure crypto play. They've done less with it than I think that they should have, but that's a different issue. They've been all over Model Context Protocol, one of the early people there to launch that remote server. You look at the partnerships, you look at the guest checkout stuff that they're doing, agentic commerce. It's just like they're not reactionary anymore. Now, not everything that they're trying is going to work, but this is a very different company than 2 years ago. Just very different.
All right, so that's what we got on PayPal, SoFi, and Robinhood. We do have big tech earnings that some companies reported last week, Tesla and Google, and Meta and Microsoft. So to preview Meta, Microsoft, and go a bit deeper into the Googs, let's bring on Mr. Steven.
The great and powerful.
What's going on?
Dude, can I buy you a Fitbit?
No.
See, I told the chat that you would refuse to wear a Fitbit. And I think we all need to measure our sleep. So you should go buy it. You're not going to let me buy it for you, but you should go buy a Fitbit.
I mean, why do I need you to buy it for me?
I just was being nice, but would you buy a Fitbit yourself?
No.
See, I knew, like, you, of course, like, you don't, like.
You just got to send it to his house. Maybe he puts it
My
on.
wife wears a Fitbit.
No, you should get one too. You and your wife can compete with like steps per day and sleep score and all that stuff.
You know what he just said to you, Amit? He said, you like shit my wife likes.
She tries to get me to wear a Fitbit all the time. Trust me. If she can't convince me, you're not.
Dude, I'm telling you, it's legit. It's pretty cool. Like, you should get one.
Pretty cool.
Like, it's actually like the health shit.
Why didn't you get an
Fitbit over any of the other ones?
What'd you say?
Why didn't you get the Aura ring?
No, I did, but that was annoying me. Like, I had the Aura ring 2 weeks ago, and it was just really, I didn't like how it felt. It made my finger itchy, so that's why I just got this instead.
You can't lift with them on. You have to like, buy a protector for it. Like, they're dumb.
Yeah, agreed. Anyway, speaking of a company that owns Fitbit, Google.
So true.
I did catch a little bit of Tanner, your and Roy's conversation last Friday on Googs. So obviously a little bit of a difference of opinion. I know Steve, I think, is in the camp that Google crushed it. So Steve, I'll give it to you first, then we'll get some conflicting and different perspectives here to try to add some nuance to Google. Is Google a buy after this quarter? That's my question.
Screaming.
Okay, why?
It's one of the most obvious buys. The Bears are wrong. The Bears have been wrong. There's no substance to the bear case. And it is one of the best companies in the market right now. I mean, in all seriousness, did everybody actually listen to the earnings call and go through the numbers?
Yeah,
listen, no, but I read the transcript if that counts and looked at the numbers.
Yeah, no, that absolutely counts because you can read it quicker than listening to it. So that absolutely counts. Look, this is a company that, and I just checked my previous articles to get the numbers, is I said something to Tanner earlier. I wanted to make sure I was correct, and I was. Before 2025 started, the analyst community was expecting Alphabet to earn $9.03 in 2025 of EPS and $11.82 in 2027. Now they're expecting Alphabet to earn $9.95 in 2025, going up 92 cents. But 2027, they've only taken up 4 cents. So the growth, the expected growth over the next fiscal years was 31%. Because the analysts have taken out 2025 so much, it's brought the forward growth down to 19%. Alphabet is trading at less than 20 times 2025 earnings and at 16.24 times 2027 earnings. The whole bear case surrounds itself around search being cannibalized or deceleration or something about search. The facts, this cannot be refuted. 100% true. This is not an opinion. These are the facts. ChatGPT moment was Q2 2023. That's a fact. Google search revenue was $42.63 billion. Since then, it has increased to $54.19 billion. On a year-over-year basis, search has grown 11.71%. And on a quarter-over-quarter basis, it's grown 6.88%. Every quarter for, I feel like, the past year and a half, all I've heard is search is going to be cannibalized. Search is going to be cannibalized. AI. Well, cool story, but here's the real story. AI overviews for Alphabet has over 2 billion monthly users. and AI mode has over 100 million monthly users. The Gemini app has grown to over 450 million monthly active users and is seeing an increase of over 50% quarter over quarter in daily requests. Not even Alphabet's own Gemini app is cannibalizing search. The facts are the revenue keeps going up in search, and they're expecting it to continue to go higher. So regardless of what Grok does, what ChatGPT does, what Llama does, Perplexity, Anthropic, any of those companies, the facts still are that search continues to grow its revenue. And then you have cloud. Cloud did 31.67% year-over-year growth. It is off the charts, and cloud still has a $106 billion backlog. Then you got YouTube. YouTube is incredible because just the ads, not even subscriptions, just the ads is doing 9.8 billion. And then when you add the monthly subscription in with the other subscriptions from Google, that's doing 11.2 billion. This is all on a quarterly basis. So on a quarterly basis, they just generated $96.5 billion of revenue, which is almost a 14% year-over-year increase. Now, before I finish my rant, I'm going to share the screen and show everybody why this is probably worth more like $275 a share right now, or it should be worth $275 a share. So, Tanner, and I gave you the numbers. So this is where they were at the beginning of the year. The growth has gone down significantly because they've taken up the 2025 estimates without taking up the 2027, which doesn't make any sense. But when we look at Alphabet, where they are today, less than 20 times earnings this year and less than 16. And if you look at where their growth was at the beginning of the year and you look where Apple is, Apple's at 20% for EPS growth. And they're trading at almost 30 times earnings. If we put Alphabet at 265, it's still cheaper. You put Alphabet at 275, it's still the cheapest in the Mag 7 on this year. Not anymore after Meta, but it's still right around the cheapest. But guess what? It's still cheaper than Apple at 275. Like, this thing is so undervalued, it's actually disgusting. And
Can we get some conflicting opinions?
Sure.
So, Steve, you definitely made your case. You obviously think the quarter was amazing. I think Tanner and I agree with you. So the only one who disagrees is Roy. And I don't think he fundamentally disagrees with the numbers. But Roy, what is...
Someone said in the chat, Tanner, you can't beat the milkman. Just admit it. I'm not disagreeing at all. And also, his name is Steve. Don't call him the milkman.
No, he's definitely the milkman. He's definitely...
I'm going to get a freaking gallon of whole milk for his housewarming gift.
Never mind. He's the milkman.
You're going to give me milk for the apartment?
Well, I'm going to get you something else, but, you know, I am going to bring it to you guys.
Dude, I don't drink milk, so it's not...
What do you mean? Dude, fresh from the farm?
Milk is bad for you, dude.
It is not bad for you. It's
not bad for you.
All that calcium shit is propaganda, bro. It
makes your bones strong.
What's the bad part, though? All the calcium is what's bad?
It's all natural.
It doesn't taste good. It's not good. Anyway, Roy, why is Google not a buy?
Well, so let me back up and first say, yeah, it was a really good quarter, like really good, not just solid, like really good. Was everything perfect? No, but that, I mean, like an A+ quarter is very rare for any company, but very good, much stronger than expected. And I've we've had this discussion before, maybe not Steve and I, but Tanner and I, Amit, we've talked to. So I think I'll go about it this way, that quantitatively, if you look at the actual data itself, so there's quantitative analysis, there's qualitative analysis, there's more other kinds that you could break that down, but just go with me. So on the data itself, it's like, yeah, things are good, revenue's up, what's not to like? Now, there were some analyst questions regarding this, and Sundar Pichai, commented directly on that, and he said, well, impressions, I wouldn't worry about that, and the click rate and everything. So those aren't the main things, and those are okay. Like, they're actually slowing. But what actually matters is what we're actually doing as far as revenue, and talked a lot about Gemini and other things. So like, half of Google is doing very well. Search is, I believe, being disrupted, and it's even going into this quarter, people ask like, what did I think about Google as far as how they report? So it's probably going to be very good, and you're not going to see that decline yet in search. You might, but it's probably a little bit too early. Now, the reason why I'm thinking this is because of there are a couple of indicators that are showing a slowdown. Google's own admissions, part of that was calculated, but the DOJ trials there with Apple. But then the other part is qualitative analysis. So it's all individuals just speaking and writing articles on like Search Engine Land and other SEO type people that are talking. Advertisers are also talking as well. And not every single one, but the vast majority have a whole lot of concerns, and they have a whole lot of questions, because the model that Google has thrived upon as far as the web is changing quite a bit. Google has to change along with it, and they're doing the absolute right thing. But there is data and there's numbers that Google has not and will not release, that they're covering it up. And the people's experiences. Now, these are just like individual boutique advertisers or SEO people that handle, like 50 different accounts or whatever it is. But they've been in the business, some of them like their entire careers, which is hard to fathom, but that's how long Google's been around. And they have a lot of concerns because they're like, hey, we can't figure out what's working. The data is hidden. It's clouded over. Google is saying this and that. Our experience is the opposite. We have concerns with our models. We're not sure that anything is working, and it all keeps changing very, very rapidly. Now, maybe that's an industry that dies off completely. But as they're drowning, like they're basically crying out and saying, hey, there are some big concerns here. And Google has largely just brushed it off and said, it's fine. Everything's great. Search is strong. And they do this time and time again with publications and surveys that come out. They had one recently with the Pew Research that came out this week, or actually it was last week technically. And they're like, it's flawed methodology and it's looking at the wrong things. And I'm sure on some of these studies that's the case, or they're saying that they can improve. Sample size could be better. They had some points there, but every single time they're just like, it's flawed, it's skewed, just trust our numbers. And they will cherry pick things constantly, like, in Apple's like, hey, Safari, first decline that we've seen. And Google was very quick to say, well, but across your entire ecosystem, it's up. So I'm not saying Google is bad. I'm not saying Google is not going to beat the S&P 500. I'm not saying Google didn't put up great numbers. What I'm saying is qualitative analysis indicates that there are problems that Google is brushing over that I think it behooves investors to at least consider. I think that there will be a slowdown in search revenue. Now, the question is, and I'm not certain on this, I'm not making a bet on Google, is will that slowdown in revenue be fully offset or even more so in the short term by all these other vectors that they have? In the long term, it surely is. But what does that gap look like? So that's where I'm at. I'm not super bearish on Google. I'd actually like a position just at a lower level. I think 275 is a little aggressive.
Roy, before I respond, have you been lifting?
Some, yeah.
He constantly lifts.
I'm not that strong, so yeah.
You look like you've been lifting.
Thank you.
Wait, hold on, Roy. Is it your birthday?
No, that was back in July. So
okay,
like I said, it's July still. So earlier July, 7/11.
Okay.
So what I'm going to say is, I'm hearing a lot of opinions and speculations from these independent reports.
Yes.
It's really, that's all it is. And when I have to make a capital investment, I'm not really going to pay a lot of attention to individual reports that could or that may or may not be biased based off of them not getting the results that they used to on SEO. That is something that is subjective to industry, and I care about the numbers. The data, the only data that can be confirmed, because once again, everything that I'm hearing can't be confirmed. It's all questions based on speculation from models. What can be confirmed is Alphabet just put up their third consecutive $50 billion revenue quarter from search. That's the only thing that can be confirmed. So it's not slowing down.
Well, we'll see. I think actually next quarter we'll actually see some of that slow down. And the reason why I said it, and I forgot to mention this point, is so there is a natural tendency, I think, especially for those that are invested in the market, to focus solely on the numbers. The numbers are very important, or to focus solely on the narrative and the story. But I mean, that's important too. But the numbers, if you're going to weight something, and the numbers, which are real, I mean, they should be. And there's no reason to not trust Google's numbers. Now, they may be selective in what they show, but yeah, they're valid numbers. But I think it is also a mistake to completely ignore the qualitative analysis. So to remove Google from the equation, imagine if we see Palantir. They have amazing numbers. They're doing great things. They accelerate 50% year over year. It's great. But then you start hearing a lot of different people and companies saying, actually, their technology, it's really let us down recently. We're reconsidering. We would be fools to just say, well, the numbers are strong. This is great. Palantir has an immense amount. Now, if it's just one or two, sure. But when there is dozens and then hundreds, and then some major institutions that are saying the same thing and have questions, we ought to at least consider, like, well, maybe there is an issue here. So I'm not saying Google is doomed. I'm not saying search is dead, but I am saying there's a lot of people that are deep into this industry that are seeing these trends, and they're alarming.
But what you just said, we could absolutely quantify if something was wrong with Palantir's tech by the number of customers they have. If we see not just deceleration in customers, but actually a loss in customers, that is something we can absolutely quantify. The only thing that we can quantify with search is the top end number, and it continues to go up. Well, it's actually established a trend over the past couple of years that it continues to live by. Amit, share my screen. Like, these are charted out, the actual revenue segments. That does not look like a revenue segment that is falling off by any means.
Yeah, I mean, they continue to charge more.
This has been the argument for over a year now with search.
Yeah, they continue to charge more for their clicks. The reality is that's not the only number they track. If you look at their 10Q,
paid clicks was up though too.
There. What's that?
Paid clicks was up though too,
and impressions are down, which is not shocking given AI reviews. And again, this is one quarter too early. The piece I keep forgetting to mention is, because many of these SEO people have been involved in the industry for 10, 15, 20 years, the first time that they have trouble, an issue with the shift, which really it started about 3, maybe 4 quarters ago, but really about 3 quarters ago, well after the narrative that search was dead and Google was in trouble, they started seeing issues and raising concerns. But because of the deepness of that moat that Google has built, and because these people have been in this their entire life, they're not going to be like, okay, I had a little bit of trouble with Google. I'm done. I'm going to blow up my business, or I'm going to find something else. They don't do that. It takes a long time to make that switch. And I know this because I was a small business owner. I actually ran into problems with eBay a long time ago. And it was like, okay, well, what do we do? How do we go around this? We've been using eBay at that point, I think, for 5 or 6 years. And it was a major source of our income. So that was a tough thing to navigate. We weren't getting clear answers on why some of the issues we were encountering were happening, and the resolution was very unsatisfactory. We were close to making the switch, and then they finally resolved it. But it was a multiple quarter thing for us, and that was just 5 years. So given human nature, like, the tendency is, like, when you go in and every single day is the same thing, and Google promises, oh, well, we'll do these things and we'll show these numbers and it'll be clear, for you, and things continue to not work. And it seems like your entire space and industry is dying. Usually about 9 months to 12 months is when people start saying, okay, I got to figure out something else, and pulling the plug. And so we'll have to see. But I think that's when it'll actually start showing up more in the numbers. Impressions is not the best measure. I'll give them that. Sundar Pichai mentioned that, and a couple others were like, these are less important. I'm glad that they still give them to us. Now, if the other thing that I want to warn is, if they start hiding these numbers, instead of just, posting revenue, they start posting revenue only and saying, oh, the numbers are fine, but they don't matter nearly as much, kind of like Netflix did with their membership stuff. That's when I would be very alarmed as an investor, because there's a point where if your product, they say it's more effective than ever. SEO people are saying the opposite. I don't know who's right. It's probably some truth for both, that there's some winners and losers out there. But ultimately, if you continue to charge more and more for your product and your customer, which is the SEO folks, not only, but that some of them are getting less and less, there is a breaking point.
So
we'll see when that is.
Real quick, I just want to say we do have some people in the chat like Peter that have worked in the industry for a long time, and he said Google has never had a threat to their search business before, but now they have about 24, specifically this SEO industry. So what Roy is saying is not like he's wrong, that there are people in the SEO industry that
there's a lot of people that are saying this, and that I'm not refuting that. All I'm saying is, at what point are people going to actually stop this narrative? Are we going to have this narrative if Google keeps growing over the next 2 years? Are we going to still have this narrative?
Well, no, I think Roy's argument is in about 9 to 12 months, you will see a material decline in search, because by then the LLM-based query is going to be so advanced, or at least they're going to take up so much market share that Google search will decline. However, I think the pushback to that is, what if AI mode just takes modern day search and transitions it? And if that happens, then problem solved, right?
That can happen too.
So right now they're projected to do 99.59 billion in Q3 for revenue. In Q3 2024, they did 88.27 billion. They're expected to put up 12.8% year-over-year growth in revenue next quarter. So doesn't look like search is slowing down next quarter. Doesn't look like it's slowing down based on the revenue estimates for this year. Certainly doesn't look like it's slowing down next year. Right now, the consensus estimates for revenue, 54 analysts for this year, 393 billion. 57 analysts for 2026, 437 billion. That's a lot of analysts. Check this out. 2027 goes to 483 billion, and there's 35 analysts on the consensus panel for that. So once again, if these numbers come in, are we still going to be hearing this in 12 to 18 months from now?
How do you use those numbers to compare to this qualitative comment by Rango? He says, in the agentic world, your eyeballs mean nothing unless you're in social media. For product discovery, the agents will get you exactly what you need. You don't make that decision, and that's where the world is going.
All that matters is the revenue number. If the revenue keeps going up, do I care how they make that revenue? No, not at all. So if search revenue keeps going up in an aggregate, I don't care how they're making that revenue in search, as long as it's rolling in. Everything else is semantics.
So I think it's too early to say how Google's going to pivot their business. They have, literally the smartest minds are working on Google to solve this case. It's like you're betting on a business that has the entire stack for artificial intelligence. I'm curious on how companies like OpenAI and other AI players are going to be able to compete with them on a model-to-model basis, just based on cost to serve, distribution. Google is so well placed with GCP and the team that they already have, the data moat that they have. I mean, they are very well positioned. YouTube, Android, it's insane. Like, they have so many advantages.
Keep in mind, they also have 95 billion in cash on hand, in addition to another 53 billion in long-term investments on the balance sheet. This company is so well capitalized, and currently it's the most profitable company in the market. NVIDIA may overtake that in Q4, but right now they've done over 100 billion in net income. They have the firepower to spend whatever they need to do to fortify and protect their moat. They've always done it. They've never not done it. And no other company has the stack, like Tanner said, from Android to YouTube to cloud to search, for everything to work the way it does, and for it to learn off of everything. Nobody else has it.
Enterprise tools, personal context through Google Workspace. They have all your emails, all your docs, all your
spreadsheets. They're not going to figure it out. It's crazy.
Well, what about this? What if they lose Apple? That's 20 billion, according to Bloomberg, they lose in search revenue.
Yeah, that's fine. Like, they'll keep 20 billion then, so it'll make them actually more profitable. It will hasten the decline in search.
Well, won't make them. That's not sure. That's not true, to be fair. We don't know how much they're making from Apple.
No, but let's assume a rough estimate. Let's assume it's at least
they're paying 20 billion. They're not paying 20 billion to get 20 billion back.
Right. What I'm saying is they'll keep their 20 billion, so they'll have 20 billion more cash and that search will decline faster than it would have otherwise, but it's not going to immediately drop off by that full amount that they paid for. Basically, what they're paying for it, paid for itself, for multiple years out. So that's actually short term.
They're probably making $40 billion off Apple.
Okay, so then what happens if they lose Apple and then they lose $40 billion?
Short term, that's really good for their revenue, actually, or really for their bottom line. And it
would be horrible for the revenue.
It is bearish for that narrative that search is declining, because you're really going to see that in the numbers, especially if they're, if that happens, Apple's not going to be like, oh, we'll just have no default search. It's like, no, it's Perplexity. It's pretty clearly they should just buy Perplexity. But to go back to Google, just so I see a lot of comments that think I'm saying something I'm not. Google is going to be just fine. The other half of their business is going to be really, really good. If that was a standalone business, I would buy it right now, but it's not. I think search is going to deteriorate, but again, Google will be fine. The question is if there's going to be a gap between them being fine or not, and if that gives a greater buying opportunity. I still think that Google will outperform the S&P 500. It actually hasn't. It's underperformed over the last year. But I also think that there's a reason why Google trades where it's at, and it's justified. It's not all just hypothetical stuff. There's real disruption. There's a lot of unknowns. The market tends to not like uncertainty, and not everything is great at Google, although there's a lot going for it that's going really well versus where they were 2 years ago.
I think the one thing that's super bullish Google is that most people in the world still don't know what the hell an LLM is. And for the next 5 years, they're probably not going to care.
And dude, they won't need to know what an LLM is. They need to know that whenever they open Google Chrome and they ask you a question, that it gives it a more intellectual answer.
Yeah.
Like that's the thing that I think is so interesting, is that Google, I think the end game is not to transition people from Google search to Gemini. It's just to change. Whenever you go to google.com, Gemini is what's going to pop up. And it might still be called Google. Everything might be the same, but the way it answers you will be more direct and exactly what AI overviews are doing. And to some extent, they'll ask more for subscription rather than advertising revenue. But so far, that's been working. Like, that's the problem. I mean, Sundar Pichai, he's been making it work. So, I don't know. Everyone says it's going to turn around at a certain quarter, and it just hasn't yet. The Apple quarter was supposed to be Q2. That's when Apple said, hey, you know what? We actually saw a flip, and we saw negative growth rates. It's like, well, Google search actually accelerated in growth. Like there was no drop off. We were expecting 9%. We saw 11.7%. Well, Apple sees a decline. We see an acceleration in growth. How does that make any sense?
There is a real narrative issue for Apple to have a 30 forward PE over Google there's an issue there.
The multiples should be switched. I'll pay Apple for Google's price, and I'll pay Google for Apple's price.
Yeah. Google is, relative to other Mag 7 too, like cheap. I just think that there's better opportunities out there. But yeah, Apple trading where it's at is just ridiculous.
Steve, have you sold your Apple yet?
No, but I'm probably the biggest Apple bull out of the four.
So when are you selling Apple for Google?
It's crossed my mind several times in the past week.
Do it.
You're talking a lot of bullish stuff on Google, but you're continuing to hold your Apple.
Yeah, look, Apple's just one of those companies where it's just so easy to hold it. It really is easy to hold Apple, but it's getting me really worried because they're just not doing anything that these other companies are doing. They missed the LLM boat. They miss cloud services, and cloud storage and cloud services are two different things. I'm not saying they missed cloud in general. They missed just enterprise services on cloud. They are not utilizing their cash the way I would like. I love buybacks. I think their dividend's a joke. They should stop the dividend at this point because why pay less than 1%? It doesn't even matter.
It's so dividend funds can pick them up.
Take that dividend money and buy Perplexity. Do something in AI, because the biggest threat to Apple right now is that Alphabet gets so far ahead of them that people start switching to Android.
That's not going to happen, but
it will happen, bro.
It really may. I will switch from Apple to Android if there's a reason to.
You are in the minority.
That's like saying, dude, Motorola, BlackBerry, they're so ahead of the game. I'm not going to switch.
Dude, I have an Android tablet right here. and I have an iPad Pro.
I
saw was
don't
brick.
own Apple
Android.
stock. I don't own Apple stock, but you guys, I can't even believe you're making the argument that Apple's moat and how deep it is in our lives will somehow be disrupted because their AI is crappy.
Well,
No.
it's not.
Bro,
It's not
no,
just.
bro.
It's not just bad AI. Like that. The other is there's been immense switching costs on Apple. Going from the Apple ecosystem to Android is tough because you're leaving behind a lot of stuff, and it's just hard to move all your.
That's the main reason people don't switch.
Dude, I'm
But-
not gonna.
but-
I'm
but
not.
hold on.
I'm just saying.
AI.
I am not gonna text a girl with green bubbles. Okay?
That's a fun thing
Like,
to say,
That's-
but you
no,
absolutely
it's not
will.
a fun thing. It's a real thing. You think that? No, bro. Like
Is that really your whole thing? Like your
It's a
whole
big thing.
The youth is not going to go to green bubbles, and you don't want to be the odd one in the group chat.
What are you talking about? Green bubbles?
I've
See,
literally
this is-
got blue
you didn't
bubbles on my
This
phone.
is the qualitative part to the thesis that you have to understand. When you have an Android and your friends have iPhones, it goes from iMessage to green bubbles.
I'm not going to dispute what you're saying because I have heard that is a very kids in.
It is a
kids in
very
school,
real
like I
thing.
mean, like young kids get bullied if they have green bubbles. I've heard of this.
Wait, why? Are you serious?
Yeah, if their parents get them an Android, they get bullied. But the thing is that if AI gets like you're saying, oh, just for their LLMs, like it makes a small difference. I mean, the way we interact with these will be personal assistants. Okay, having them versus not having them will be a multiple on your productivity, a multiple on what you're able to do. If Apple truly does fall behind on this, it will be like moving from a Motorola or a BlackBerry to an
No one
iPhone.
is leaving Apple.
You say no one. Look at
I
their
will
growth,
bet.
bro.
I'll bet you like $5,000 in the next 5 years. We'll put it up there.
Dude,
So the other
look
thing
at
I'll bet you
Pixel's
$100,000,
growth
bro.
rate.
There's people are not leaving Apple.
Where is Pixel getting their growth? From nowhere?
Dude, other parts of the world, but in North
Other
America,
parts of the world buying Pixels.
in North America, in the parts
Google
of the world where Apple
sells
dominates,
Pixels
people are
in
not
North
leaving
America.
Apple. People are not
Google
leaving
sells
Apple for-
Pixels in North America. That's where they're getting their sales. They're buying them from Samsung buyers and Apple buyers. The reason why Apple has had no growth on phones is not because no one's upgrading from iPhone 9s. It's that there is consolidation away from Apple.
It's because my iPhone 15 from 2023, I'm not even going to upgrade to the newest one because it's already perfect. That's why Apple's not having growth.
Well,
Not because
You
people
are not
leaving
ready to make
Android.
the switch.
Get
There's
out
none
of
of
here. No, it's not because people are switching it. Dude, my entire life for 14 years is an Apple. You
Yes,
think I'm
but
gonna
if
switch?
that's what Roy's trying to tell
Yeah.
you.
AI changes the switching cost equation, whereas before you'd have to manually or maybe pay for a program or pay somebody to transfer all your stuff. Now, or at least very soon, AI can do that for you. And by the way, it can also replicate a lot of those things that you miss on Apple, including blue bubbles, which I have on my Android phone.
I have the perfect argument against that. The perfect argument. You know what the argument is? You know how simple the argument is? ChatGPT has something called memory. And so all the stuff that you think needs to be integrated through the phone is integrated through Grok or through ChatGPT or through whatever LLM I'm using.
You're proving
But
his point.
No. My point is, if I have the Grok app on my phone and it does all the agentic things that a Pixel will do, why do I need a Pixel? Even if
Yeah.
Siri
So
can
what
do it.
you're saying is that the hardware is less important than the software, but the software is a cross-platform.
But the
So the
software
ecosystem-
is commoditized.
Wait,
Yes,
hold
but
on.
the ecosystem is
Hold
less
on.
important than the LLMs that sit on both platforms. So
Right,
the
but
hardware will be the differentiator between Google and Apple.
No. I'm saying the hardware is meaningless if my iPhone 15 that has Grok, which has
Exactly.
hold on. If the hardware is meaningless and the Pixel is not attractive because it's just the Pixel versus an iPhone, then software is the moat. Now, if software is inside of an app, not inside of a phone, inside of an app, then why do I need to go to Google's ecosystem for AI, as you guys are saying, when the AI app is on my phone?
Because one, you're paying a 40% premium for an iPhone. Okay.
Don't give me the price argument.
No,
People have been
don't
buying
give me
iPhones
the
for
price.
That's important.
No. Well, you just. I'm not talking about you.
and strike
Okay?
one.
I'm not
That's- try
talking
again, try
about
again.
the
That's
4
not-
mil or the people in the room here that I'm talking to. I'm talking about the average person, the grade 9 kid who a
Tanner,
$1,400 phone.
Apple has sold 2 billion devices. What are you talking about? The average person. The average person.
Yeah,
has
but
iPhones.
they are price sensitive. The reason that they're differentiated is the ecosystem. If you're saying you take the software out, then you're just paying for a more expensive phone.
Okay, what's your second argument? Because the price is not good. So
I would rather go a different route because price is not the best argument because too many people have iPhones. There's a lot of people
this
that
iPhone cost me
$300.
This iPhone cost me $300 because I traded in my old iPhone.
And let's not forget that Verizon and AT&T and T-Mobile all have very robust ways to get an iPhone or an Android phone cheaply. Nobody is priced out. If Apple was priced out or if Android was priced out, we would see a huge dip in them. We're not seeing it on either side. So we can't let that fly. But what we can let fly is that where you are using the ChatGPT or the Grok app argument, what if that's not the only AI you're using? And it comes down to personal assistant between Alphabet's personal assistant and Apple's. That's where we're going to see the biggest run for the money. Because when the personal assistant can do a lot of mundane tasks that you don't have to do anymore, and you can just tell it to do things and it does it, that will be the inflection point that gets people to move.
Well, Amit is saying that it's going to be integrated regardless.
But Grok's not going to be able to do certain things that the Alphabet AI is going to do.
Like what?
So let me give an example real quick, and then Steve, I'll throw it back to you. Yeah. I actually installed Perplexity's AI assistant on the Pixel. I've used Gemini as well, but I was very curious on Perplexity, so I've been using it, and it is good. But I can tell you, it is not as good as a fully integrated assistant that they have in Gemini. And frankly, Gemini is not as good as it should be either. But it's still better than Perplexity. There's less latency. It knows how to do things and get things right on the first time. It knows what calendar app I'm using. It's Google Calendars because it's all integrated there seamlessly. Versus whatever Apple can do, it's not going to be a native integration. It's going to be some partnership with Perplexity, which is fine, which is okay. But it's significantly, especially as Google continues to improve the AI assistant, which they should be able to do very easily. It's not nearly as good. It's just not the same experience. So, Steve?
Yeah, so where I am worried is we've seen it from e-commerce, okay? Pre-pandemic, not many people were ordering toiletries on freaking Amazon. Now it's normal to order all those things on Amazon and get them next day or even same day, depending on if you're in a major city or not. We've seen a much bigger emphasis on time. So I've used this example before, but I'm going to use it a little bit differently this time. If an AI assistant on your phone, Grok or ChatGPT is not going to necessarily have access to contact list, credit card, all this stuff on my phone. If I need to make a dinner reservation for 8, send the reservation out to the party, get transportation. If I need to get a flight somewhere, book a hotel, and I can just talk to my phone and tell it to do all this. It has my credit card information. It has my email. It has everything.
Wait, hold on. Why would Grok not have that information? Why are you assuming that?
Why would Grok have that information?
Because I can tell Grok, hey, here's my credit card information. Become my agent. Like, what are you talking about?
It's definitely hard. It's definitely harder.
Have the credit cards in their phone saved.
No, but I'm assuming
Apple Pay and whatever Google Pay.
Hold on, Perplexity already is a shopping agent. Perplexity is not like Google or Apple. You can just give it your credit card information and it goes to shop.
Hold on. Just because a company creates a product doesn't mean that it's remotely the same quality as another one. So, just because they have a shopping agent doesn't mean crap.
No, but it does mean that Steve's argument about the flight data. If Grok is my go-to assistant, it'll have all my flight information. Why does it need to be Siri or Gemini?
I think that there will definitely be information gaps between companies. Google has an inherent advantage.
Well,
I agree they have an advantage, not enough for me to switch.
Hold on. Apple also, right now, they both have the same advantage because they both have all your data. It's who can leverage it first. That's the big thing. Because they're both at the same playing field right now. But for me to go online and have to go online and figure out my hotel room, figure out my flight and all that stuff, if I can just say, I need to go to LAX from JFK on August 1st to August 3rd. I want to fly business class or whatever. I want to stay. I want 2 queens or 1 king. And it does everything for me. I tell where I want to stay. And I don't have to do anything. And it gets me the best prices. When you start getting a level of AI assistant like that, and that's just a very beginning use case, you can start going down the rabbit hole of other use cases for it. That's when you may see people say, you know what, Apple's not doing this, but I can do this on Gemini. It's saving me time. That becomes a real thing.
I don't think that ever happens.
I think
I would be willing to bet you're never going to do that, Steve. You're never going to leave iPhone the way you think you are. I don't think that's going to happen. You're too entrenched in the system.
I do not want to leave iPhone, but if Alphabet's AI assistant becomes much better than Apple's, I will leave in a heartbeat.
I still think you're not going to leave. I think it's easy to say that, but I think it's hard to actually do it.
I think that's the thing that Steve has really nailed down on, is that it's always hard to believe that user behavior is going to change. But we have to remember, throughout every big change in technology, it happens constantly. And it's so hard to imagine that it's going to change.
Nobody thought the Palm Pilot was going to go up extinct.
You guys
got absolutely obliterated. So did BlackBerry.
You can't compare that.
Of course you can.
You cannot. The iPhone has been entrenched in my life, at least.
So was BlackBerry. Everybody used BBM.
Yeah, bro, people even Steve said the other day,
for a reason.
There's not a chance you're going to get me on Robinhood, blah, blah, blah. Then he tries it. He sees the pricing on crypto. Boom, he's changed. Like, people change their consumer behavior all the time. And they always say they're never going to. Oh, Tesla, like I'm going to plug my car into an outlet. How ridiculous would you look? And then now Tesla continues to sell more and more cars.
You guys, you're using examples.
That's a bigger entrenched.
These are horrible examples. And the reason for that is because the reason Steve went to Robinhood is because it was cheaper.
It was cheaper.
Yes. And
okay, now hold on. Let me continue. It was cheaper. That is a monetary decision, not a user experience.
What did I say about the phones? What did I pick my whole desk?
I don't know what you said about the phones, because this iPhone cost me $300. It wasn't expensive.
It did not cost you $300. If you were to buy an unlocked, this is not even for debate. Okay. If you buy an unlocked iPhone, it's more expensive than an Android.
That's unlocked.
Let's move on now. That's done. No. It's more expensive.
If you trade in your old phone, you get.
If you trade in your old phone.
Second of all,
if I trade in my old Android, it'll be cheaper than $300. I can't even believe you're putting up this argument.
Yeah, that's not going to last.
You're seventh in the world in debate. Put up a real fact now.
Okay.
It's time to do facts. We're doing facts now.
Okay. All right, Ben Shapiro. Facts, feelings. The point of $300 is that whether it's 300, 200, 400, my point is it's not as insane as like 1,200, 1,500. And that's kind of your argument, right? That the iPhone's too expensive. So let's agree Android, iPhone, kind of the same point on price.
No, I don't agree. Samsungs are cheaper than iPhones.
I'm not disagreeing with that, but I'm telling you, my iPhone was $300-400. I can get the bank statement from October 2023.
Yes, because because your more expensive iPhone versus Android that you traded in was worth more.
Well, my point is, Tanner, there are agreements with AT&T and Verizon in the land of freedom, not the land of communism where you're from, where we actually are able to get deals for 2 to 3 years in which you have a subsidized phone. I don't know what they do in Canada, but you don't have to pay $1,200.
They're not subsidized. There's no deals. You're just paying through your internet plan. We have those in Canada too. I'm not in a communist country. I know, you're just paying more for your internet plan than you would an unlocked plan. That's it.
So if someone has to pay $50 a month for their iPhone for 24 months, 0% financing, you're saying that's unaffordable? Because that's what I was doing on my old phone.
No, I'm saying I'm saying if you did it with an Android, it'd be cheaper.
That's fine. Maybe it's $25 a month, but 50 versus 25. It's not like it's some dramatic. It's not like a Louis Vuitton bag. Versus
that is price, and that's what you said. That was the real argument.
Okay. Well, no, that was not the real argument. That was
before you continue, Amit. Can I give prices? Like just real quick. I looked on Verizon as a new user in an incognito mode. The Apple iPhone 16 Pro is $999 a month, heavily subsidized over 36 months. So that's $360 essentially, versus Samsung's phones, and also I don't see the Pixel, but I'm assuming, oh, there it is. Yeah, they're the only Pixel that they actually charge for is the Pixel 9 Pro XL. So it's like the elite of the elite phones. So you'd be paying at least $360 more, over 3 years.
Okay, again, this it's so irrelevant because 2 billion people have iPhones. So I'm not even going to debate the money argument, because you can win that argument
with anything else.
You can win that argument if you want, but enough people over the past 10 years have proven they can buy an iPhone. The bigger argument here, why this is not BlackBerry, is for the past 15 years, at least for me, and I'm pretty sure for a lot of people in the chat, the iPhone is integral to our lives. Everything we do, every app we interact with, every user experience we have is rooted in the iPhone.
So was BBM at a time, just saying.
Okay, but BBM. First of all, the internet
BBM was the blue bubbles of that time.
The level of integration we have with the internet and with the mobile app revolution, the DoorDashes, PayPal's, all these different products we use every single day, that is a different experience than what people had on BBM.
Agreed.
So I am so entrenched in that from the Apple experience. My grandmother came over.
But you just said that your data is moving to ChatGPT and Grok, where it's no longer built into the ecosystem. Those were your words.
My point is, so my grandmother has an iPhone. She came, or not an iPhone, an Android from India. And she had me like do a couple things on her phone to set up like the Wi-Fi and all this stuff. Dude, I couldn't be there for like more than 2 minutes. It was one of the worst experiences I've ever had. That's
just because you're not used to it. You know that.
But my point is, because of the user experience being so entrenched in iPhone, it is different than a BBM or a BlackBerry moment of just like, or a Palm Pilot. I think there's a highly differentiated experience for the past 15 years consumers have had. Number two, and I've still not heard an answer to this by any of you guys. If ChatGPT and Grok has all my information and I can press download on the App Store and then they do all the agentic things Steve is talking about, what is the reason to switch?
What is the reason to stay and pay a premium for no
what premium are you talking about?
Like the thing that Roy brought up.
Are you really going back? Is this your best argument? The money of the phones?
Higher price, and frankly, like by almost every stat, the hardware is just worse.
Yeah, it is just worse. They're slower.
Apple sold $45 billion
because of the eco. See, you're breaking apart your own argument, dude. You're talking past. No, hold on. You're referring to historical data, which Apple has a great ecosystem. You're saying we're going into an area where the ecosystems will not be between Apple and Google. You're saying it's going to be owned by the LLM models, which will be across both ecosystems.
Okay.
Which will bring the switching cost down to zero.
Okay. So what's your point?
So now the argument is between which hardware device will you prefer?
So you're telling me I'm going to prefer a Pixel over an iPhone that I've used for 15 years?
And you're seeing it in the growth rates. Pixel phones are actually selling more and more each year. Apple is not doing that. So you're already seeing it in the user data.
On an absolute basis, that iPhone is destroying any other Pixel or Google Android phone.
Because we have not begun to switch to the LLM models that are hosting all the user data.
Doing 25%. Steve, Android's doing $45 billion worth of sales every quarter in hardware phones.
Android is 74% of the market right now.
How many dollars? Steve, you're the one who loves absolute dollars. Tell me how many dollars that is.
I don't think it's 45 billion every quarter. What the market is right here.
Yes, but that's because people in India, 1.2 billion people have an Android. Yes, but that argument is also irrelevant because a lot of third world countries have an Android because it's really cheap and that's what they can afford. That's not my point. My point is for the developed worlds that have proven to be able to buy the iPhone, people like all of us sitting right here, your argument is Steve and I would switch because of cost.
I'm not
you guys specifically.
No, but then who are you talking about, Tanner?
And look, I do not think a lot of people are switching. I don't think that
no one is switching because of cost. Not even a lot of it. No one.
Look,
maybe like
4% of new users or for trading in a phone is insignificant. Nobody's switching over $100. The only way they're switching is if the
hold on. Before you continue, Tanner, answer that question because you got mad at me at saying no one's switching over $100. What's your response to Steve? Because it's the same argument.
I loved that. Sorry, you said who is switching?
He says no one is switching over $100.
I don't think people are switching over $100. I think people would switch if the experience from the platform is significantly better. And my argument is I am worried that Apple is missing the boat and Alphabet's experience is going to be way better in a year than Apple's. But from a cost standpoint, I don't think that's an argument.
Yeah, I do think that in the... So one, do I think Apple's going to zero? No. But what people are betting on is what's going to happen into the future. And right now, people think that Apple is going to keep their market share. What I worry about is that if price does become an issue, you guys are not going to worry about price. But there are people who take out higher loans, and you could say that they do 0% APR. That's not the case for everyone, okay? Those people are going to switch to lower cost providers. This is how Motorola and all these other providers even have business at all, is that they're selling for cheaper cost phones.
You know,
but that's just one part. Right? I honestly think that
hold on. You know, there's cheaper iPhone. The iPhone 14 is way cheaper than the iPhone 17. You know that, right?
Yes, but then compared to the budget versions of Android phones, they're still expensive.
So let me throw something in there that maybe will be the resting point. We can keep going though. It's early yet.
It's early, extremely early.
At some point, there is going to be a major phone platform. Really, it's Android or it's iOS that is going to launch a very well integrated AI assistant. Do we really expect that Apple will be the first one to do that? No, none of us do. Mr. Google Bear, no. Mr. Apple fanboy, no. These guys, they wear glasses. Well, all you guys wear glasses. You're geniuses. But no, ultimately, it's going to be Google. And what Apple launches, the question is it going to be good enough? I think most likely what they're going to do, they will partner, but it's not going to be as well integrated and as seamless and as effective as what Gemini actually offers. That is when that super cycle that Dan Ives likes to talk about as an Apple bull will happen, but it will be for Pixel, not so much for Apple, because people that are using Apple will be like, oh man, you can do that, you can do this, you can do that. Why can't I do any of this? And it might take Apple years for that. It historically it has. I don't see any signs of them starting to move faster. So I think that's what really kicks off the route. Now there's going to be plenty of people that stay with Apple. It's going to be a slow bleed, but it is going to be a bleed in favor of Google and Pixel and this Android ecosystem.
Can I say Meta has started to get customers for their VR and the Ray-Ban stuff, which also supposedly their Ray-Ban sales have tripled year over year. So one thing that I think is funny about that is talk about the ecosystem there. There's no customers over there. They're creating a new platform for people because the hardware is unlike anything else that you can get elsewhere. Okay, there's nothing like it. Now, who is going to get to that next generation of hardware? Is it going to be Apple? Or is it going to be Pixel and the players that are a little bit more hungry for this space? Because honestly, we're seeing what Google is able to be putting out right now, and we're seeing what Apple's going to be putting out. And I don't feel confident in Apple's ability to sell products at the prices that people want to pay while still being innovative. Now, they can charge a lot, like what you see with the VR goggles, but then you're paying like $3,500 or whatever it was. And, you know, that's such a small percentage of the overall population to get something that's innovative, you know. Meta is going to win that game.
I'm not defending Apple. I don't give a shit about Apple, quite frankly. I care about the claim you guys made that people will leave their iPhones for a Pixel or an Android. And my answer
what if that Pixel integrates better with the ecosystem of the XR glasses?
No one is going to use the stupid glasses.
The sales say otherwise.
It will not be an industry. I'm saying it right now, July 28th. It's not happening, bro. Because why don't you have them, Tanner? Why don't you have them, Roy? Why don't you have them? No one gives a shit.
I have an Oculus.
Yeah, and when do you use it, Steve?
I have an Oculus.
Yeah, okay. There we like this
today.
Ray-Ban nonsense. Like
that's today.
Okay, how many people, Tanner? I'm happy they said 300% versus giving an actual number of users. Yes, because but not that many people are wearing glasses, walking through New York City, talking to their smart glasses. Like that's a whole different thing for another day. But
this is the whole.
Yeah, admit in 5 or 10 years from now,
I disagree.
Be a thing of a past.
I think the phones will survive in the next 10 years, and the glasses will become.
Even Zuckerberg said we're going to move into a post-smartphone world.
I don't think.
I don't believe that's true, but yeah,
I don't think
glasses will not replace. Let me say it slowly. Glasses will not replace the phone as the basis for the next computing platform. It's not happening.
Not replaced.
Why are we maybe stay confined in a screen?
Imagine an Apple product, or imagine Apple if they were like, "Oh, but this doesn't have a watch to go with it. There's no headphones for the Apple." Imagine if there's no glasses to go with the Apple. Like people would go, "Oh my gosh, you know what? I'm actually missing out on the full ecosystem experience." And Pixel just put out a new product that has twice the power, like. The good product updates that get put out get people excited and get people to switch. A bunch of people just switch from, oh, I would never use Gemini to switching away from ChatGPT and going over to Gemini.
Yeah, but that's still on your phone.
User behavior all the time.
It's a different debate. That's on your phone, and there's different user experiences. A new hardware product on top of your head that doesn't help you see better, like all three of us that need glasses to actually see, I don't think is going to work.
I'm already wearing them. Why would it be hard for me to switch?
Because it's not going to be as easy as you putting on your glasses. It's going to be a much stronger device. with a lot more weight that you don't even know what the hell you're going to be doing looking at some holographic image all day. I don't even think that's natural to be able to engage with a product like that. I don't think that's going to work at all. And that can't be your argument for why people will switch to Google, because let's assume it's a dud.
I'm just saying it's all additive. I'm just saying that Apple could be a massive player. Like, I have no reason to doubt Apple other than the fact that they've been slow. I feel like they've had the advantage and just dropped it.
I don't care.
I would think that the two strongest players in artificial intelligence is Google and Apple, because they have the hardware, they have the ecosystem, they have the software, right? The whole thing. But Apple just dropped the ball.
No, you're preaching to the choir. I don't care about Apple. I just care about the fact that you guys think people will leave Apple. And the answer to that question is no. And I've not heard a single argument for why that.
I don't believe these polls, because I think back in 2015, people would say, I'm never switching to an EV. Steve would never have switched to these. People have
I'm never buying an EV.
Dude, put up a poll and say how many people are going to put their credit. How many people are going to allow their AI to use their credit card? Like,
I think if I put up that poll, I think we're going to get 70-30 yes.
Well, we have a yes right now. They would.
I mean, they would leave Apple for.
Yeah, you guys are winning.
Yeah, we have a yes.
You guys are winning 52-48. Your argument is winning. I think it's closer than what you would think.
I think there's a lot of people too where this is my understanding of this. We're not Apple people, although I do have one family member that we don't talk about, the black sheep that is Apple. My parents are all using Apple. It works great for them. They like it. But, a lot of times it's like a whole family thing that if you all have Apples, you have that whole ecosystem, that's great. But when some begin to switch because like they find it far more compelling, and again, we're not there yet, but when it becomes very evident, very clear with that real AI assistant, I think that's when we start seeing it. And then we'll see not like we'll see families that start to switch. It's like, okay, well, the dad switches and he's very tech forward and he's like, hey, this is great. Hey, that's cool, Dad. Let's all get that phone. And then later, like maybe the grandma gets a Pixel of all things and switches. But there'll be a lot of people that hold on to it for a long time too. It's going to take time. But man, Apple is terrible at this type of innovation. They're terrible at keeping pace. They're falling further and further behind. I don't know why Steve is holding his Apple shares and not buying more Google, frankly. I don't know why anyone would be invested in Apple instead of Google right now. And I'm not like, yay, Google, it's the best ever.
Again, this is not even a debate about the stocks. This came down to a simple question. Would I leave my iPhone for an Android? I'm telling you, no one's doing it.
Dude, until you see the product differentiation, I don't believe what you're going to say. There's a bunch of things that people say they're never going to do until they see products that suit their need. Like my brother, he's an old school plumbing guy, never would switch to a Tesla. He's like, oh, what am I? I don't want to use the derogatory language that he would say, but he's not driving an EV. And then he saw the Cybertruck and it's bulletproof. And he's, oh my God, super excited to get that truck because that matches his lifestyle.
That's different. These examples,
it's not different.
These are such horrible examples. Where did you learn these
examples?
They're not good.
Dude, whenever,
did you ChatGPT, did you Gemini these examples? Because they're not good examples.
You can say they're not good.
Ad hominem.
You could say they're not good. There are people that like drive trucks. They get into a certain type of cultural thing, and then they never want to change because that's who they are right now. Okay,
Tanner, do you use Windows or Mac?
Windows, everything.
Why don't you go to a Mac?
If they were strong with AI, I would be willing to switch to a product
I left my Apple computers. I had an Apple desktop and a MacBook Pro, and I got rid of them, and I'm a Windows person now.
Again, I think you're in the minority because I've stayed with Apple for a very long time.
Dude, Apple is the minority in computers, dude.
Apple
is 100%. I'm just saying, if you're an Apple ecosystem person,
I was a full Apple ecosystem person. The only thing I have now is an iPad Pro and a phone. I do laptop and desktop Apple. I got rid of them.
I do think that the people that are diehard Apple people, the people that have like it in their chat or like in their name and everything is Apple, they will be harder to switch. I'm not suggesting that they will be the first ones to come over, but the people who are on the fence, and there are people who get pissed off with Apple. A lot of their products that they've put out recently have sucked. Okay. And they are on the fence and want a way to get out.
Tanner, that as a percentage of the overall user base, these are people that are not, most people are not tech bros. Okay.
Is it 10%?
Most people just use their phone every day. Like,
is it 10%?
Just like Steve. Steve writes a lot of Seeking Alpha articles. He needs a lot of tabs open. Like, this is a very small percentage of people that are meaningfully going to say, hey, I need to look at the specs on the Pixel 9.
No, but so if there is a product that they think is better, that is a nice software update or a better camera, things that they would like, wouldn't that be reasons to switch if the ecosystem falls out from underneath?
No kid in some fraternity at Rutgers is going to really look at the Pixel. They're going to want to be in the group chat with their friends. They're like that's just not an argument.
Yeah, but the group chat's hanging out on X now. Maybe it's not in the iPhone thing. Maybe it's going to the new platforms that are being created.
No, the group chat is.
So I want to address a comment in the comments. I can promise you that this person's correct. I'm never switching from whole milk to skim milk. That's just not happening. Never.
All right. Do we want to wrap, by the way?
Yeah.
This is exciting. This is fun. This was Tanner, is good. He got to do a little bit of back and forth. It's fun. It's good stuff.
Yeah. I enjoyed it.
Steve, why are you yawning? I thought you sleep at 2 a.m. every day. Why are you yawning?
Oh, I made myself work out at 6:30 to try to get myself to go to bed.
Oh, that's good.
At a decent time tonight.
That's good. Well,
so where would I have placed in the debate? Like sixth best or?
No. I think it's a tie. I mean, it's like, well, technically you're winning.
Bro, I didn't see a single person in chat that agreed with you.
Yeah, you're looking at your comments. You're not looking
at everyone said
it's split.
It's 52-48. So obviously you're winning 52%.
Somebody legitimately asked if I prefer donut or muffin. Like, they're not even in the same realm. Like, if you're going to talk muffins, it's a scone or a muffin. Donuts and muffins are too different.
What are we doing right now?
I don't know, but I got to tell you, there's a food channel I've been watching on YouTube, and it is so incredible. Oh, my God. I need to start baking.
Okay, well, look, I think it is a good debate to have because in this future of AI, as I like going back and forth on this, there are some people that probably will switch. I think there's a lot of people that won't, but like, who knows, right? Because if there are people that switch and that iPhone revenue goes from 45 billion to like 35 billion in the next year per quarter, that's an issue for Apple. That's a massive issue for Apple. And that's a major tailwind for Google, which might end up, helping the stock a lot. I just really don't think people are going to go to a Pixel 9, dude. I think the average person does not.
I think it has to be a big percent though. If 5% start leaving, that's not a good sign for Apple. Like if they lose any bit of market share, that's going to suck.
Yeah, but that's like tens of millions of people. I don't see that, Tanner. Most people do not care.
Well, I think that Google and Samsung and all these need to show up now. They need to put out products that align well with that. Maybe we'll see that at the next Google event. That's in August, I think.
Amit, click on the link that I sent you. I
Why
just want your reaction. Don't share it. Don't share it. Look at how perfect that is. Like this dude can bake.
Don't share it.
I'm more bullish on this Apple.
Oh my God.
This Apple is pretty bullish. I will say I'm not a fan of Apple.
I'm so bullish on this dude's freaking baking.
I will say I'm not an apple pie fan. Like I don't like apple pie.
I'm going to clip that, and we're not going to hear the pie part. So, man, Tanner destroys Amit in debate to the point where he admits he's not an Apple fan. Woo! Got him.
Go. All right, final thing: SoFi pump or dump, and then we end it. Steve, what do you got tomorrow?
I think it's going up. I think it's going to get a triple beat. I think it's going up. There's no reason for it to go down at this point because the market clearly doesn't care about the tech story, and you have a lot of tailwinds. You have Fed is going to loosen. You're going to have the housing market get unlocked at some point. I think it goes up.
I'm doing the poll in the chat as well. Tanner, what do you think?
Can we? I don't want to do a poll, man. I want to I gotta go. Like, if we're not ending in the next 60 seconds, I'm just leaving. I have to go.
You have to go what? Cold plunge?
The opposite.
Sauna?
Yeah.
Dude, it's SoFi earning. This is the night where you got to,
you need to stay up all night. What are you doing?
No, I need to go to bed because I need to be up for SoFi earnings.
Dude, I'm going to wake up same time. We're both going to try to get our
bed. You need to, keep the stream going.
Okay, Steve's dragging it. I'm not
40 seconds.
You need to keep the stream going all night, Tanner.
Roy, pump or dump on SoFi?
Pump.
Okay, I'm going with pump. So we got 4 pumps. We got 4 pumps. Chat says pump, 65-35.
We're definitely not going to dump now.
All right. Tomorrow morning, we will be live. If you want super in-depth SoFi coverage, Tanner's channel. You want general, more market open, a lot of other stocks, my channel. And then Roy's going to be doing PayPal. So for those that really care about PayPal, he'll be live on his channel. And then we'll all probably talk about it later this week as well.
And I'm going to start a cooking channel.
Steve will start a cooking.
The cooking Pokemon channel.
There we go. All right, everybody. Thank you for joining. We'll be back tomorrow. Bye, everybody. Have a good one.